Hello, Bulls and Bears. It is August 2nd, 2021. It's Monday. Thank you for being here. We have a lot of important updates to get into today, but first of all, let's just acknowledge what happened recently. The eviction moratorium has officially ended nationally. Now, there's still states and certain areas, locations that have put restrictions on evictions, but what's next on the horizon? What else could possibly expire and cause a lot more pain out there financially for people? Well, the next cliff or the next deadline, as some would call it, is the unemployment cliff or unemployment deadline that's coming up in September. So we have about a month. We're going to talk about that here in more depth in just a few minutes. But first, quick shot here at the markets today. Again, it's Monday, August 2nd. Markets were mixed, some in the green, some in the red. So let's not focus on that too much. Let's talk about oil, still up at $71.48. Gold, silver pushed down a little bit. I still accumulate silver as much as I can, as often as I can. I still believe that silver's time to shine has not been shown yet. But when it rises, just like the rise that we saw in 2020 when it was hovering around 16, 17 for a long time, and it jumped up to nearly $30, it happened very, very quickly. And a lot of people rushed to get in at that time. Well, I have a word of caution on that. Do not rush in when something's rising, very rapidly. As Warren Buffett would say, be greedy when others are fearful. And people are starting to be fearful right now with the price of silver being pressed down here in the 25s. So just my own word of caution on that one. And yes, I continue to accumulate silver at this time. Just like when we saw that huge rise in digital assets, a lot of people rushed in to the digital currencies, and then we saw a huge pullback, a huge crash down by like 50%, and some people lost so much they even decided to leave this world, for lack of a better term. They decided to no longer stay among the living. All right, so a lot of people jumped in at the wrong time with a lot of money and got FOMO, a fear of missing out. So you wait for the pullbacks. That's when you pull the trigger. And look at the digital assets that pulled back 50%. If you would have bought in just a few weeks ago, you would now be up about 25%, just as we talked about here and just as I tweeted out back when that happened. All right, so the word of caution is, just be very, very careful at the time you choose to invest. Yes, there are still a lot of people on the sidelines waiting for this entire inflation monster to pull back or correct. And one of the themes of this channel, or one of the principles of this channel, is to try to predict how to prepare. And if most of you know by now, I'm riding both sides of the fence. You want to have some cash on the side for a huge correction or deflationary event, but you also want to try to invest and try to keep up and benefit from some of this obvious inflation that we're going to continue to see unless some black swan event comes and changes everything. We're going to continue to see rising prices. Why? Because nothing's being done to stop the prices from rising. We still have massive money printing, ultra low interest rates, mortgage rates keep getting pushed lower and lower. We're going to talk about that here in just a second here. 10-year bond right here. This is the key to look at when you want to see what's happening with mortgage rates. Another drop of over 5%. We're now down at 1.17% on that 10-year bond. And we all know that the Fed is behind what happens in the bond market and therefore behind what happens with mortgage rates. And if we look at the 1-month chart here on this 10-year bond, we see that we're creeping down again towards the multi-decade low. And that's what needs to happen in order to keep this complete Ponzi scheme economy continuing to look like it's growing. It's got to be more debt, more people spending money that they don't have, meaning more borrowing, which is allowed to happen by the banks, by the money printers that continuously prop up the banks through endless liquidity injections, repo, reverse repo. We've never seen this level of hands-on by the Fed, by the money printers that we're seeing right now. right? And again, some people say that this can go on forever because there's an endless supply of digital money that can be created out of thin air. Other people say that there's going to be an end point. There's going to be a massive, shocking reversal. Again, nobody knows, but I continue to prepare for both directions. Now let's talk about the shutdown recession, as many would call it, from 2020 when the sickness first rolled out. We saw a massive pullback in spending as a lot of places closed down, but it was the shortest recession on record. So think about the massive job losses that we saw, the biggest since the Great Depression, but yet this was the shortest recession on record. Well, what makes that possible? The definition of a recession is 2 quarters of negative GDP growth. What is GDP growth? Well, it's mostly consumer spending in the United States anyway. So in other words, 100% of the people can lose their jobs, and all you would have to do is send out enough stimulus checks to keep people spending, and on paper the GDP doesn't have to drop. It can continue to increase. Therefore, you can completely avoid a recession just by money printing and sending out checks to people that therefore go out and spend it. So you can see what a sham of a situation it is when people say the economy's growing. It just means that people are spending money, and most time, or in most cases, it's money they don't have, money that they went into debt to spend, or money that was just handed out to people. And if you look at all the payout programs that are happening right now, we see both long-term payout programs for a lot of seniors and retired people, and a lot of people on other types of assistance and other payouts. And then we saw, of course, the huge payout uptick in 2020 with the sickness being used as the reason behind the need for these endless payouts. Well, now the piper might have to be paid as the unemployment cliff is approaching. Let's take a look at this next article. And in this CNBC article, this talks about the coming unemployment cliff. More than 7.5 million people, unless it's extended, may fall off the unemployment roll. Now, this has been about 18 months since the shutdown. So we go from March 2020 to March 2021. That was 12 months. And then from March of this year through September, that's going to be 18 months. All right, so this could be another date to watch, just like the federal eviction ban that was overturned recently. We could see a massive drop in spending if these unemployment benefits are allowed to expire for this many people all at the same time. And again, that's going to be early September. And this article puts it as September 6th is the date to keep an eye on. Right, so keep an eye on that date when GDP is measured by spending, and when this many people fall off the unemployment roll, that could be a big pullback in spending. I wouldn't be surprised if some other program was implemented to take the place of this drop off in unemployment. Maybe some other payout program, maybe another stimulus check, maybe more continuous stimulus checks. We'll have to see. But we do know that we're going to see nothing but rising prices as manufacturing has been obliterated out of the United States. And I was just looking for a new printer today. I used to be able to get a printer for $40, $50. Now the cheapest printer I could find at several locations that I looked at was about $70. And it could have been that they're just low on stock, but again, we don't make much here in the United States. So we're going to have to import more. And guess what? Other countries are going to raise their prices. And we still have sickness that's affecting many parts of the world, supply chain issues. A lot of people out there are still scared. And, continue to brace for this. And you might want to put your money where it's going to grow with this inflation. Most of you know my thoughts on that. Thanks, everybody, for being here. We're going to end this right now. Talk to everybody very, very soon. Stay well, stay safe, keep stacking. Bye for now, everybody.